Good morning, valued advisors. My name is Shayne Fickling, Regional Vice President with E4 here in the Madison, Wisconsin area, welcoming you to the Brew, building relationships every week. Thanks for tuning in. For those of you that are tuning into the Brew for the first time, welcome. Today we're continuing August lineup on Link Benefit and LTC. This morning I'm joined by Rob Johnson, who's Sales Vice President with Lincoln Financial Group. We're here to discuss planning strategies using Lincoln MoneyGuard, and we'll be uncovering some design ideas and unique strategies that you might not be familiar with. Thank you for joining me today, Rob.
Thanks for having me. I appreciate it.
Rob, Lincoln's been a dominant player in the Link Benefit and LTC space for a long time. I believe the start of the MoneyGuard product goes back to 1987, in fact. What has led to the success that Lincoln's had in this space over all these years?
Good question. I think it's our willingness to evolve. When we initially rolled out MoneyGuard, almost 38 years ago, it was a single premium solution with a 90-day elimination period and full underwriting. That has changed quite a bit, where we've evolved, where we're not ordering medical records or doing APSs anymore. We offer longer payment durations. In fact, for the MoneyGuard Fixed Advantage product, we offer payment options up to 10 years. And as the only player with a 0-day elimination period, that's allowed us to garner a lot of business, because that ability to know that those benefits are available day one when we need them. So Lincoln's ability to just shift, listen to what clients need, what advisors are wanting, has helped us maintain that market position.
Yeah, it sounds like flexibility is the name of the game, and kind of meeting clients in the middle with what they're looking for.
Yeah, you're spot on.
I know there's a number of product changes that went into effect over the last number of months. Can you highlight some of those changes that enhance the MoneyGuard product?
Yeah, I would love to do that. So MoneyGuard, we'll back up even a little bit further. So last January of 2024, we repriced MoneyGuard, and the repricing was anywhere between 0 and 22% with an average of 15%. So for folks on the call who haven't looked at MoneyGuard in the last year and a half, you're going to be surprised. In fact, I ran an illustration yesterday and compared it to one from 4 years ago, and it was actually less expensive now than it was 4 years ago. So the repricing helped us a ton. Now, what we also did is we listened to both the field, my friends at E4, and clients and other advisors we work with, and they were asking for more flexibility when it came to claim time. As Shayne, there's been new entrants into the market over the last 10 years, and they've come in with indemnity style linked benefit plans. And they've been aggressive with that. And Lincoln for a long time was a reimbursement policy. And I'm not here to argue the merits of reimbursement or indemnity. I think there's value in both, depending on what the situation is. All of this insurance would be a lot easier if we had a crystal ball. We think about long-term care, our average buyer of MoneyGuard is 60 years old. 60. Our average claim was age 83. So it's difficult to predict in 20 to 25 years, will my spouse be alive? If she is or he is, will they be able to physically take care of me? Will my kids still live in the area? Will I want my kids to provide care? So care has evolved quite a bit. It used to be this, grandma was at home and then she went to the nursing home. That's what long-term care was. And a lot of people still have that connotation that long-term care equals nursing home. And what I like to do, and I know my friends at E4 like to really position often as this extended care, because that long-term care often people equate to nursing home. The reality is we paid out $100 million in LTC claims last year. Only 10% were paid to a nursing home. 35% were paid to an assisted living facility. And this is where care changed. 55% were paid to home care agencies. So 90% of our claims are outside of a nursing home. What we also heard from the field is we wanted more flexibility. What if my spouse wants to provide care? Or I want my kids to provide care? So the indemnity style policy resonated. So on April 14th, the newest version of Fixed Advantage, which is MoneyGuard Fixed Advantage 2025, which is available, don't forget, available in all states except California, Montana, and New York. Indiana is coming online on Monday. But approved in all those states, it's now going to offer you the option of an indemnity style or reimbursement style policy, but you don't have to make that decision at the time of application. You will now make that decision at the time of claim. And the really fun part about that is the entire pool of benefits is available for either reimbursement or indemnity. So I'm a visual person. I like to show it, what it looks like. So again, reimbursement, sometimes there's a negative connotation. The word reimbursement, folks think, I got to come up with that money, pay that provider first, and then submit that bill to the big bad insurance company. What do insurance companies do? They'll sit on that claim. It'll be weeks or months before I get paid. I will tell you the vast majority of our reimbursement claims are set up on a direct bill, meaning that care provider bills Lincoln and Lincoln pays that provider and allows that insured and their loved ones to stay out of that billing and bookkeeping process. That's one option. The other option now is at the time of claim, you say, I would rather have my spouse or my loved ones or a friend provide care. You can choose an indemnity style payment at the time of claim. This option provides 80% of their reimbursement max monthly benefit. So in this case, we looked at a $16,000 if they chose reimbursement. If they choose indemnity, it's 80% of that. So it's $12,000. For example, here's the nice part. Like I said before, the entire pool of benefits is the same, meaning that if they choose the indemnity style payment option at the time of claim, that benefit period just extends. The other nice part about that is you hear 20%. I don't want to take a 20% haircut. That 20% stays in their bucket of money. So they're not lost. It might sound for many of you familiar to the old Pac Life Premier Care plan. That one you did lose the 20%. With this one, you don't. And if you choose indemnity, you could choose that 80%, or you could just choose an IRS per diem limit or a choice of the policyholder. And that's really a theme for today is choice for the clients. So you got your choice of reimbursement or indemnity. So we don't have to have that crystal ball. And then if you choose indemnity, how much do I want per month? So significant change to MoneyGuard here April 14th. The other enhancement we made is we heard from the field, there was opportunities where folks wanted to pay their long-term care using an HSA, or they were looking to deduct a portion of the premium, or even they had a C Corp, they had a number of key executives, they had business owner clients. They would like to buy long-term care for those executives. In fact, we're working on a case with E4 right now. We've finally broken out what portion of the premium is buying the life insurance versus the long-term care. And we didn't do that for the first 37 plus years. Now you're going to see separate identifiable premiums for life and long-term care. And I'm going to show you here in a couple of minutes exactly where to find that in the illustration. You're not going to have to hunt back. It's going to be right there on the main page. So two things, if you think about pricing enhancements, will typically move us to the top of the spreadsheet if we're spreadsheeted, and long-term care isn't term as it is in a SPIA. We look at the policy as comprehensive, but if we're just looking at benefits, typically will be first or second highest monthly benefit. And then that choice of reimbursement or indemnity, those are big enhancements for us. I cover 14 states. I'm up 82% in business year over year because in large part to these enhancements we've made to the product to offer guarantees and choices.
Yeah, and Lincoln's a household name. When people hear the Lincoln name, they associate it with security, and one that's been around for a long time as well. So you definitely have that going for you. As an IMO, we work with a lot of different companies, Lincoln being one of them. We've seen a lot of change in the industry, obviously, over a number of years. The competitiveness of the products can kind of come and go from time to time. What would you like to tell an advisor that's maybe done some business with Lincoln in the past, and maybe they've gone in a little bit different direction with their last case or two?
Yeah, it's great. And it kind of leads back to what I just said. They haven't looked at this in a while. The pricing alone has improved significantly. And maybe they shifted to an indemnity style policy because they like that, hey, my client's going to get the money, they can use it however they want. Now that's an option, along with that ability to do a reimbursement. So those things that were maybe holding us back, if we said, well, you weren't as competitive price wise, or you didn't have indemnity style benefits, those have both changed. I mean, actually, going back to the beginning of the pandemic, Lincoln was really conservative. We've been at that point in the market for 33 years. The goal was to be in the market for another 33 years. So when rates dropped, we pulled back on pricing. We want to be caretakers of our existing clients and make sure that we're around to pay those claims. So we pulled back on pricing. Then as rates have improved, we've been able to offer more aggressive pricing. So that's a key thing, is just to take a look. I mean, the really nice part is we didn't change the part that clients like the most, which in many cases that we don't have an elimination period. We're still the only plan in the market with no deductible. You think about the most important time of this whole process, it's the time of claim. So if I can come to the table with a solution that, one, gives you the choice of reimbursement and indemnity, and then when you need the benefits, you don't have to pay another 90 days, that's really powerful for us. So
Yeah, that reminds me of a success story we had with Lincoln earlier this year or late last year. I can't remember. One of your competitors had a case where they required the client to go through a phone interview process. He wasn't 100% engaged. We know how this can go sideways sometimes. He got distracted. It was a day where he was very stressed out and probably shouldn't have completed the call. He went ahead and did it anyway, and the case was declined. And we really were struggling with trying to find an option for him. And I reached out to the folks at Lincoln, and a lot of the carriers just wouldn't even be willing to have him go through a phone interview process again once he had been declined. Lincoln was the one that stepped up and said, no, we'll actually allow him to do another phone interview, a second option, a second chance at saving this case. And lo and behold, he came through with flying colors. He dialed in and was focused on that second one. And we were able to go back to the advisor and the client with a nice success story on that. So
I remember that one. I love hearing that. I mean, I think the enhancements, really being a leader in the underwriting space. We think about, we are the first one to go to streamlined underwriting. So we're not ordering medical records. We're not doing paramed exams, meaning no one's coming out to weigh you or poke you. We will consider folks that were declined. We don't have a tobacco rate class. We're the only carrier in this space that has just a couples rate or a standard rate if you're single or widowed. So 2 simplified rate classes. And then when we think about health underwriting, we were the first to introduce this, is answering health questions is deeply personal. And people have busy schedules. And so we wanted to offer flexibility in terms of how folks answer those health questions. So we were the first about 4 years ago to offer the option of doing e-interview or online PHI versus a telephone phone call. And Shayne, that telephone phone call can be stressful and long. You're trying to remember, when was that doctor's appointment? When was that joint injection? Did I have an MRI? Did I not? What were the medications? A lot to remember. So we introduced that online PHI where folks can now, especially if they're 60 and younger, we're defaulting to this, take their time answering their health questions. If they get 10 questions in and get stumped, they can save and come back and finish another day while they research that answer. So really meeting folks where they're at. They can do that online 24 hours a day. So again, Lincoln being a leader when it comes to evolving with that underwriting process. And we've seen other carriers since we introduced that come in and offer their own online PHI.
That's great. I know you have a market advantage product on the variable side of things. For those that might be on the call that are securities licensed registered reps, what would you like to share with your advisors that's unique to that product?
Yeah, unique, and the fact that we had this guaranteed UL MoneyGuard product built on a UL chassis for, at that point, 33 years. We kept hearing from advisors they'd like, hey, I know I need to be talking about extended care, long-term care solutions, but I hate the losing out on market participation. Pulling money out of the market and going to a fixed product with a 3% inflation rider. I think we could do it better. So Lincoln introduced Market Advantage, Lincoln MoneyGuard Market Advantage, for those folks that say, you know what, I'd prefer to choose my sub accounts. This solution has 50 plus sub accounts, and you can fund it either as a single premium or as long as to age 75. So you got a lot more premium flexibility here. You can even, if you did a 10 pay, after 10 years, you could start adding more money if you wanted to. And what I love about it is it has uncapped market participation. You still have the 0-day elimination period. You have the indemnity benefit. But it provides that option. And really, where we're seeing folks buy that solution is for folks in their 40s and 50s. Average buyer of that is 50. Our average buyer of the fixed version is 60. So getting folks in that they know I should do something, but I don't have the 100,000 sitting on the sidelines just yet because I'm trying to pay for college and save for retirement. But I could do something that's $200, $300, $400 a month. That's manageable, and I believe in the market long term. So that's the solution. Issue age is 30 to 70, and is available in all states except New York.
So that's great.
Yeah,
sounds like you've got some solutions for pretty much any demographic in the planning space out there. Well, that's great. Well, with that, as we wrap up, I want to remind everybody that today's brew and all of the brews are recorded shared on the brew page and on the E4 website at www.e4.insurance. And don't forget to subscribe to our YouTube channel to keep up with all of our brewcasts. They're released every Wednesday at 10 a.m. Central. Next week, we'll complete August's lineup where Steve Walker, VP of Institutional Accounts and partner here at E4, and I will discuss a real success story about an affluent couple who faced the choice of self-paying for long-term care or buying the insurance. Tune in to hear why these clients chose insurance, even with a net worth over $400 million. Thanks, everyone, for tuning in today. Thank you, Rob, for taking your time to join me as well. If you have any questions that come to mind as a result of the session today, or if you thought of a client that should be engaged in this conversation that hasn't yet and still want more information about how to best approach them, please reach out to your RICP. And thanks again for tuning in. I look forward to seeing everyone next week on The Brew.